Hello everyone, PS from PS Invest plays here today. Since March 2020, FedEx stock had tripled in price until May 2021. Since May, the stock has shed 17 to 18%, and the Q4 earnings report did not do much to stop the decline or reverse this trend. The stock is nearly flat in 2021. Is this trend going to continue, or we can expect higher stock price in 2021 and beyond? In this video, we will understand its business, its financials, its future outlook, review its charts using Elliot wave to see how we can make money. So stick around, I think you'll like what I have in store for you today. FedEx Corporation, ticker FDX. FedEx, formerly Federal Express Corporation, is an American multinational shipping and delivery services and supply chain management company headquartered in Memphis, Tennessee. FedEx today is best known for its air delivery service, FedEx Express, which was one of the first major shipping companies to offer overnight delivery as a flagship service. FedEx is also one of the top contractors of the US government and does assist in the transport of some USPS packages through its service FedEx SmartPost. FedEx air shipping services have made its main hub, or known as the super hub, at Memphis International Airport, the busiest cargo airport in the world by 2020, and Hong Kong as second busiest cargo airport in the world behind Memphis. FedEx and fellow package delivery titan UPS each reported record revenue and net income in their most recent annual reports. Both companies were able to capitalize on the surge in residential deliveries as folks stayed away from in-person stores and shopped online instead. FedEx had been prone to missing guidance and struggled to sustain FedEx Express's profitability. Lately, it has reversed the trend by posting quarter after quarter of rapidly improving sales and margins across the board. Despite this newfound hot streak, FedEx stock has come under fire over the last few months, likely due to relatively weak fiscal year 2022 guidance of 7% revenue growth and roughly 8% non-adjusted earnings growth. Single-digit revenue growth is a bad look given that FedEx increased revenue by over 20% between fiscal 2020 and 2021. FedEx may have trouble lapping 2020's amazing numbers, but there are plenty of indicators that signal its business is well positioned for years to come. For one, its strong performance has helped improve its financial health. FedEx now sports a 3-year low debt to capital ratio and financial debt to equity ratio. These two profitability metrics indicate how reliant a company is on debt. FedEx has done a good job lowering its dependence on debt and generating strong operating cash flow, improving its financial position in the process. FedEx Ground, which supplied over half of fiscal 2021 revenue and operating income, has undergone fleet expansions that have increased package delivery volumes without compromising operating margins. Ground now operates 7 days a week, allowing FedEx to better meet e-commerce demand. For example, FedEx was able to deliver 56% more packages on Sunday in the fourth quarter of fiscal 2021 than it did for the same period in 2020. But success isn't about delivery volumes alone. The company is working to be able to ship larger items, improve route efficiency, and better connect the US market to the European market. FedEx Europe First is an overnight service that, according to the company, connects 90% of European businesses to major US markets. The numbers speak for themselves. International priority was last fiscal year's single best performing line item for both FedEx Express and Freight, with revenue growing 40% and 58% respectively between fiscal 2020 and 2021. The competitive advantage of both FedEx Ground and Express is speed. Although convenience demands a premium, Express had a reputation for failing to deliver on profitability. That all changed in fiscal 2021 when Express finally topped its previous record high revenue from 2017. Express segment revenue nearly tripled from fiscal 2020 while also increasing operating margin from 2.8% to 6.7%. A key driver for Express in the short term could be its role in alleviating strained supply chains. The inventory to sales (IS) ratio represents the value of a company's inventory relative to its revenue. On August 17, Federal Reserve economic data reported that this ratio reached a 10-year low for the month of June 2021. FedEx called out the low IS ratio in its fourth quarter 2021 earnings call, noting that a low IS ratio drives express traffic. The contrarian viewpoint would be to regard the predicted 7% raise in fiscal 2022 revenue as a good thing. The forecast suggests that FedEx can grow its business despite difficult comps and without the tailwinds it benefited from during 2020. In addition to achieving overall record high revenue and operating income in fiscal 2021, FedEx Express, Ground, and Freight each set their own record revenue and operating incomes as well. Saying that fiscal 2021 is a tough act to follow is an understatement. So instead of overweighing the comparison between fiscal 2022 and 2021, it might be better to track FedEx's business developments, fleet expansions, e-commerce service offerings, and how they all fit into the big picture. Real business decisions, not year-over-year comparisons, affect how the company can grow for decades to come. Looking at the financials for FedEx, revenue, gross profit, EBITDA, net income, EPS, earnings per share are excellent. And even when you compare them with 2019, they have increased by a very good clip. FedEx dividend for its common shares now stands at 75 cents per share quarterly, or $3 per year. At its current price, that amounts to a cash return of 1.15%. To put the payout into perspective, the average dividend yield for the S&P 500 is 1.3%. FedEx has been paying dividends since 2002 and is also increasing them yearly. It did not cut its dividend in 2020, instead it kept it same as 2019, which is remarkable. In the chart on the right, free cash flow currently stands at $16.24 per share. It is the highest in the last 13 years. In the chart on the left, price to earnings ratio (PE) currently stands at 13.7. The PE ratio is trending along the historical average. Long-term investors could view the sell-off in FedEx stock as a buying opportunity. The business is in great shape, and the stock has a price-to-earnings ratio of just 13.7, placing it in the bargain bin. The recent stock sell-off has pushed FedEx's valuation into discount territory. Given its solid fundamentals, it is simply too cheap to ignore, and it is an excellent value stock for investors looking to pick up an e-commerce play on the cheap. This is also indicative in the charts, where I see the stock price to increase considerably in the next 4 to 6 years. Now, let's take a look at the charts for FedEx. If you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. The bull wave that started for FedEx way back in 1970s is still not over. It has completed its first 4 waves, and now it is in its final leg up, which is wave 5. If we look deeper in wave 5, we can see that it has completed its first 2 waves, and now it is in its strongest bull wave, which is wave 3. Wave 3 is typically 161.8% of waves 1 to 2, which gives us a price target of $490.82. When this wave is completed, I expect a retracement of 23.6%, giving us a price target of $429.03. After this retracement is completed, I expect the final leg up to take the price of FedEx to $532.61, which translates into a 104% profit in the next 4 to 6 years. Now, let's summarize. As I said earlier, the current stock price offers an excellent entry point. The stock is simply too cheap to ignore. Long term, I expect the price target for FedEx around $532.61, which translates into 104% profit in the next 4 to 6 years. The icing on the cake is that FedEx pays dividend of 1.15% annually. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.